pretty much to kind of. You also have like co-mods. We do have librarians who kind of help you like help facilitate the conversation as well. So I'll give it all to you.
All right. Hello, everybody. This is my first time on the public library call, so I don't know how they tend to go in general. So I'm gonna give it my best, but feel free to like grab the steering wheel when you need to and steer it wherever you need to. Really quick, I'm Niran. I'm the founder of Panbala. I've been working in Ethereum since 2015 or so. And in general, like if you're here in this like public goods library, I think a lot of the ideas floating around in your head are very similar to what's in my head. Mainly that like lots of people are building different things with crypto, different decentralized financial protocols, different decentralized applications in general, and trying to like drive value to the people who are investing or speculating in those things. But if you're like me, maybe you see that there might be something better to do with this technology, something that drives value to all of us and makes the world work better for as many people as possible. So if that sounds like what you're about, if that resonates with you, you're in the right place. And thanks for being you. The general discussion topic that I have for this week is really where the funding for public goods can come from. That is, like, if we're all we all want more funding to go to the things that we share, but like and there are different mechanisms out there for distributing resources, etc. But at the end of the day, like, where can the value that actually funds the things we share come from? So just wanted to kick off the conversation with that question, and then we can dive into different avenues of potential funding for public goods as we go on.
Hey, Niran. I'll throw out an idea that I've kind of been obsessed with, and is actually when I'm moderated, kind of the whole topic that I focused on. And I don't know, maybe I'll restate it in a way that's more impactful this time. When we're going to all digital stuff, it's abundance. It's awesome. The idea that we can offer things for free and not have to worry about being rivals and like that it's non-consumable, and that's amazing. But I've always found it hard to find a business model for those things, or a way to generate money from those things. I want to just give them away for free, everything for free. But as we implement digital technology in new and other places, there are still real world constraints at the intersection between the digital technology and people and physical objects. And so those points of scarcity that are inherent or strategic or just natural, that they're going to pop up, I look at those places as like really fruitful places to have a business model to create funding for more of the abundant things that don't have a business model. So embracing the scarcity in some places, and then using obviously blockchain in different ways to make sure that it's transparent and that the money flows to the people that we want it to, which is, I guess, everyone. I just think that like embracing scarcity, even with digital technology that is supposed to create abundance, is a really cool place to look for that funding.
I love that angle in general. It resonates very strongly with where my brain spends time. But before we dive deeper into that, I'd love to hear ideas from other people. Like if we're trying to fund the things that we all share, like what are some other ways of like where are the resources going to come to fund it?
So hi Niran, I'm gonna cheat a little bit. But I think I've sort of been trying to toy with this idea of creating some sort of like a endowment fund where the funds are reinvested through either staking or something, and the sums can be used to fund your activities for perpetuity. That's because like I help out at the alumni association at my university, right? And basically there is this drawback where like we raised like $50,000, and like it sounds like it's a lot, but for some reason the fund only yields 3% a year, which is like a joke amount. I couldn't even get like a bursary out every single year. But 3% yields in crypto is like unheard of, in the sense that I've Like you can't really find a 3% yield because everything's usually slightly higher. And such a model might actually be a little better when it comes to like funding this sort of activity, because then you don't have to worry about finding some way to extract revenue from what you're doing. And that's something that I'm trying to wrap my head around, and seeing how we can build something like that in Web3. Yeah.
Awesome. So basically, building an endowment to fund public goods. So for people who aren't familiar with generally how endowments work, can you describe a little bit about like how one gets created, where the initial resources come from, and where the like how you spend from the endowment in a traditional university type way?
So for that, like I know that advancement office people. So basically, what happens is that you cannot touch the principal, and you're only allowed to draw a certain amount every single year. So Singapore's model is that the universities are funded 60% by the government, 40% by the endowment fund. So each university has about $2 to $3 billion. Um, as a general side note, it has become a bit political because these endowment funds also tend to fund like fossil fuel companies. So actually, there is a small group in Singapore that are trying to get the university divest. I'm helping them a bit. And so basically, the advancement office, at least at my university, all they do is to try and find people to contribute to this endowment fund. They could be other foundations, that could be one. It could be corporates. And there are different ways of trying to grow this endowment fund. So the government does like matching. For example, if I raise $1, the government raises or matches you $2, something like that, to try and like accelerate the growth of the fund. And that's sort of how they get universities to be self-sustaining. Yeah.
Awesome. So basically, collecting some sort of assets, raising it from different contributors, and then not spending those assets, but spending basically the return on those assets for whatever the community is trying to do together. I think that makes a lot of sense. It's a
Yep.
proven approach, works for many universities. I like it a lot. So now, for right now, we have like embracing digital scarcity, and when people are paying for access to digital scarcity, using that to fund public goods. We have creating new kinds of endowment funds and using particularly higher crypto yields to fund public goods. What are some other methods people have in mind in terms of like where funding can come from for public goods?
I hate that I stepped into this conversation so late because I wanted to hear everyone's thoughts prior to you asking that question.
No worries. Like that was basically the quick recap of like everything so far. Like we've gone through like basically the conversation has been about different ways to fund public goods in general, like where the not methods of allocating it, not things like quadratic funding where it's like here's how we're going to spend it, but like where the funds to spend come from in the first place. So like one idea was basically when we're creating these new digital worlds, using whatever people are paying to access those digital worlds, using that to fund public goods. Another was creating new kinds of traditional endowments where the assets that are donated, those aren't spent. You only spend the return on those assets and use that to fund public goods in perpetuity. So that's really the whole conversation so far.
What about transaction typing? Some sort.
Go
Maybe
for
it's
it.
like almost like a system tax, right? Like I I think if you're a part of an economy, a local economy, I mean, the whole idea is supposed to be that you're expanding. You have like fees for things that go towards those who maintain the infrastructure, but then you also simultaneously have like we have, and this exists, right? Like contributions to the treasury that are a percentage, whatever percentage of transaction fees. Um, and so that treasury allocation is kind of like set aside for, I mean, is set aside for like whatever it is that is is a core mission. That'd be like a practical approach, and like that way you could force the percentage down like a tremendous amount, but based on the utility of utility of the network and the amount that moves through it or whatever it is, like that small percentage allocation, it just would grow with the use of a network. And so what you could do is then you could have groups like Gitcoin or whatever DAO who are responsible for who are then responsible for the allocation of those goods. So what you would do is, as a result, like you'd get in touch with like a network that is managing a certain transaction load and say, hey, we see that you have this certain percent of your treasury that you have allocated for public goods funding. Why don't you have us in charge of it? And then the whatever DAO there'd be like a little bit, I guess the issue that you'd run into there quite quickly is the question of competition as deciding what public goods need to be funded before others. But nonetheless, I think that could be interesting. That could be an interesting thing to like look into. Is like it becomes a very practical source of continuous accrual for public goods funding in the form of like treasury allocations.
I love that. So basically, you're saying that when people are building these new kinds of protocols, instead of basically having the fees either be burned like they are in Ethereum right now with EIP 1559 or collected in some way given to the token holders, have a portion of the fees on any new network go to basically a public goods fund and spend them in that way. That's what you're saying?
Yeah, I mean, effectively, I think the issue there is like kind of balancing the incentive, right? Like, because the incentive of burning treasury funds is to drive up the value of the protocol itself. But the question becomes, how can you make it's because the problem is that it's a mentality shift, and it's very hard to guide people through a mentality shift in terms of being like, hey, yeah, we can drive up the value of this network by burning tokens versus like, hey, we'll take a percentage of like the total tokens on the network and we're going to do something really good with it, and it'll, I guess the weird question is like phrasing it so like it'll benefit you and or others, you know.
Yeah, that definitely makes a lot of sense. So using the fees that people are already going to pay for access to this network, and basically driving it to the things that people share. I think that ties in really well with what Graven was proposing earlier, with basically saying, hey, if we're creating these new digital spaces, these new digital networks, when people are paying for access to it, rather than just paying the owner completely, and make sure that some of that goes to what everybody shares. I think that's generally a great pattern for funding public goods.
Yeah, that way
I
you
I
automate
personally
it too.
yeah, I personally think it might be a great pattern. In my opinion, hi everyone, by the way. I think like funding digital public good might be hard to see like a future vision, but let's keep in mind when you join the ecosystem like around Gitcoin and you're a new software engineer, you're still at the university or at school. You might not have a lot of financial available for you. And so I think all of the people they are working around public goods or open source software, uh, they're putting all of their time for free basically. And I think Gitcoin was one of the reason why we did it, create Gitcoin to fund basically these kind of contributor that they're working almost all the time for free with open source software. And I think there's a few ways that we can manage like to bring some value or financial money back into Gitcoin. Like the first one maybe will be to like retroactive funding. Like let's say you come on Gitcoin, you're you don't have any money at all, and you're setting up a grant. Your grant is successful. Maybe you can do a retroactive funding to redirect to the public goods. Like it might have a place where we can specifically like fund a digital public good only. So this might be an option to do like a retroactive financial solution. The other one is to have like a fractional like an NFT, which you can fraction into different part, where somebody like, if let's say there's 10 users that they want to get this NFT for the public goods, and like somebody in that group have like $10,000 in their pocket and somebody have $1 in their pocket, there's a way to fractionize like that NFT and to redirect these funds into like digital public goods application. It might be hard to see that vision, but I think it could work. Like it could be a way where we don't have to dig too much into our own pocket or into like Bitcoin DAO's funding, and like I think it could be a great way to have a cooperation together to fund digital public good. That's my idea.
Cool. So you're saying that basically giving people the opportunity to contribute funds, but giving them something in return, basically some sort of digital property, saying, "Hey, this is a representation, or this is to acknowledge that you contributed to this thing. It's either a nice piece of art, maybe some sort of medal, whatever it is, but basically it's something that everybody else can see. So you kind of get the social status." That people know that you contributed to this thing. Is that the idea?
Yeah, mainly it's to redirect the funds to the digital public goods, to the people who really need like these funds. So like it's just a base idea, but in a way you could fractionize like that NFT in different part, and like some of their part could be redirected to digital public goods funding. I have many idea, but these are two of the idea I had.
I think something that comes from that idea is also like directing a portion of royalties from subsequent sales from NFTs also could be a place that you could like, for example, I don't know, you mint an NFT as an artist, and then you're like, oh, hey, like I have my royalties, but then a percentage of my royalties. There's this, we've talked about it before in this group, the idea of like corporate social responsibility. There is an advantage to like marketing yourself as doing something good. Companies like, what's the name of that shoe company? Tom's? Like ideas like that, right? So like, oh yeah, like I'm selling my NFTs and a portion of the royalties from subsequent sales go to public goods funding. And then that makes it, there's appeal there. That's another way of like kind of pulling some stuff off.
I'm tempted to jump in and mention that I feel like the current model that we are often doing value flow is slightly broken, which is that we often think of it as like it has to exist in this like universal basic income, or like that kind of like I should also mention that part of like my thinking is often, well, like in what ways are the current system broken, like, and how we're doing public goods funding. And I would say that right now we don't actually have very good representation of like value flow. Like what I mean by that is like we don't actually know how, for example, from natural resources like land and temperature, that it flows to become like a livable future for us, like, and how we derive value, and we just know that as money. And so about like 4 years ago, we had this work with Institute for the Future, where we were trying to map out like universal basic asset, and then like break it down further to what are the different type of private, public, and open assets that we can work together on, and then also chart it across like spaces, natural resources, infrastructure, capital, data, know-how, communities, and power. I think it's like for us, like tracking the value flow is an important one, so that we can actually help people create new asset classes that's not just dependent upon like a derivative of money, which is something that ignores externalities right now. And so when we talk about public goods, it's also important for me not to recreate the same problems that we already have with the current economic design and financial system design that we have. And with universal basic asset, it then like allow you to think about things like, well, okay, say we think about temperature as a as a Sid knows that I talk about temperature a lot as a basic asset, right? Then you want to put that into like the Planet ATM's principal, but you don't want to keep withdrawing the principals because after that you just don't have any interest rates or any sorry, like so anything that you can withdraw out of it continuously. So but then if you do think about it as a basic asset that you want to protect so that you can actually have dividend in the future, and we all work together as like stewarding this public good so that we all can derive more dividend in the future, you can even include, let's say if we want, financial options like derivatives product on top of it, but it should not I think like it's important for us to have like distinctions and level, not like withdraw the principles when we talk about public goods as well. I hope that's making some sense.
Like that. Graven, were you going to say something?
Yeah, as Vienna was talking, it reminded me of ClimaDAO and what they're doing with carbon credits. I'm not sure if Vienna, if you were specifically talking about that in some of your thinking, or if you've looked at it, but basically there's kind of a lot going on with the economics there, but they're buying up carbon credits and tokenizing it, and people can, it's almost like embracing the speculation of the cost of carbon credits increasing. So they try to jumpstart kind of the appreciation and of those of carbon credits in the real world by buying up as many as they can. So people kind of speculate on the BCT token. So you get people thinking that maybe doing something good like buying carbon credits could actually make me money. And then in the real world, people, there's a lot of social movement for good social movement for to prevent climate change and or harness, I guess, limit climate change. And it creates kind of a feedback loop between people feeling that it's necessary to buy carbon credits and then people that were early on that make a little bit of speculative value for themselves, and that you can kind of embrace speculation by focusing people on an asset like carbon credits.
Have any of y'all read Ministry for the Future?
So yeah, so the things that so yeah, my startup actually used to work with Kim Stanley Robinson on it. So so yes, yeah, we have some people from the startup who became characters in it. Yes.
Yeah, the core, I think, thing that stands out about like Kim Stanley Robinson's sort of thesis in that work of fiction, which if all y'all haven't read that, I highly recommend it. It's very good. But and it kind of dovetails a little bit with what it is that both of you are saying, right? Which is that maybe it's not necessarily looking at public goods as valuable, but making public goods so important that they are the underlying asset, almost, if that makes sense. So it's like less about how do you fund public goods and more about public goods. Public goods. I can't think of how to phrase it. Maybe we should. I would love some input from some other people in the group about maybe how we can phrase that in a way where it has to do with how does we look at public goods less as being something funded and more as something that is the base asset.
Yeah. I think maybe I can share one conversation around this with like some New Zealand data commons people, which is that they are looking at how to turn like Maori's like stories and mythos and all that into some kind of global digital commons on top of like the land that they already have and things. And so what they are financializing is not the most bottom layer, but rather the layer on top of it, like the cultural products, like the stories. Yeah, if that makes sense. And narratives.
Niran, you were about to say something as well?
Yeah, go for it.
So in general, like I love the idea of like rethinking like basically the public goods as something that drives value to us, as something that can have value on its own. And there's one thing that kind of for me was the seed of this conversation, which is something that's called the Henry George theorem. And if you're familiar with Henry George, he's this guy who's very much about like the value of land and scarce things. He believed that it should go to the communities that create that value in the first place, because in many senses that value comes from all of us. And if there's a way to actually direct that value to things that we share, there's actually economists that came later who figured out that like if you can actually if you're collecting the value of the scarce things, you're spending it on things that make the community around those scarce things more productive, better off, etc. That actually increases what people are willing to pay for those scarce things in the first place. So imagine for a second, like a city with no government. So there's no tax on any of the land. So there's no infrastructure, there's no parks, there's no anything. Like you're probably not going to pay that much to live in that sort of place. If some of the value of the land is actually going to the things that people share, that makes living in that place more valuable. So in the extreme, imagine you're taking all the value of the things that are scarce, the things that the value isn't actually created by us in the first place, things like land. There's also digital spaces that the value really comes from me and you paying attention to them. Like if we could take the value of those things and actually reinvest them in things that make us all better off, that increases the amount of value that's available. So to me, that's part of the lever that makes the amount of resources that we have to access increase over time. It's not necessarily like the climate DAO approach is interesting and it's cool, but it's not necessarily like having a asset that is the thing that is the public good that you care about that you want it to go up. But to me, it's really more about like organizing people in a way where they can capture the value of the things where the value comes from us, and if we can reinvest it in making those things better, the value that we have collectively actually increases over time. So that the increase comes not from necessarily speculation or inherent making cornering the market on something, but really the fact that we're investing in public goods is what makes the scarce things more valuable in the first place. I'm not sure how much sense that made, but
I like the thread that you're following there. Lonnie, go ahead.
Hey guys. Yeah, I feel like we're coming into these really fundamental questions about what it is that we value, and we've been operating under this capitalist framework where GDP is like how we determine whether something is successful or not. Like obviously not us, but how the quote unquote system decides what is valuable or what is successful. And what's really interesting with this conversation that we've been having, we can begin to reimagine what is valuable and, use these digital mechanisms to attribute value or create scarce objects around them that can fund caring for them. Like I remember I saw on Twitter like months ago that a cow had been minted as an NFT, and then the revenue generated from the sale of that NFT was given to save him from slaughter and then given to his caretakers to fund caring for him. So we have this really interesting opportunity to create value around something that we care about that has been historically undervalued, and then sustainably care for that or pay people to care for it. And I love this idea of funding indigenous folks taking care of the land that was taken from them at some point, or using NFTs to buy back land and then pay indigenous folks to care for that land that was taken from them. I feel like this is really where this gets interesting.
So there's a network right now that is working on something along these. Are you okay?
Sorry.
There's a network right now that's working on something along these lines of like the fractionalization of measurable impacts. It's a Cosmos network called ICTO. It's led by this guy, Sean Conway. And there's a lot of like really strange things about how the network is planning to be run. They're pretty well tied into like Regen Network and a lot of the folks who are doing things along those lines, including like some of the people in Climate DAO and so on. But what's interesting about his approach is he has this idea for minting an NFT for the positive impact of a project. So, for example, if a community is funded for, it could be something along the lines of what it is that you just mentioned, Lonnie, right? Which is like buying back land and then using fractions of that NFT to fund people's maintenance of that land. The idea there would be how you get to the point where you make that NFT valuable is by making it into a project that had investment prior. So it's not quite the imagining that we're thinking about earlier, which is like trying to look at resources as something that is not resources. I don't like the word resource, right? But like the good as something that is valuable and then creating community around it, like Niran was saying, but rather how do you direct the value systems that exist into creating funding structures that can then be turned into these complex tokens that can self-perpetuate in the form of something like an NFT with fractionalization. So maybe that's like something that we're kind of investigating here is the recognition of goods as something that can generate its own value in relation to other economic systems, or that can build their own economics around it. Is that kind of what we're saying?
Yeah, I mean, you know, an artist that releases a collection of NFTs, and especially when it's affixed to something that they care about seeing come to life in the world or cared for in the world, I mean, I think that creates a value around it. And I don't know, Niran, one of the things that really stuck with me from our last conversation was thinking about, you know, what is the world we want to live in? You know, I think you said like we'll be successful when we look outside and the world looks as beautiful and as wonderful and as evolving as quickly as smartphone technology is evolving, right? And I think like we embed our ideals in the code we write, you know, and in the NFT projects we launch, like we can design them however we want, and they can be purely designed to flex, or they can, you know, be attached to these digital and real world public goods that we care about. And yeah, it's like really interesting. Like it could all shift in that direction, right? Where we are all organizing ourselves, our resources, our creative endeavors around these ideas that we collectively care about, and invest our energy in bringing that vision of the world to life.
Yeah, I'm totally with you there. Like, in particular, the examples of like using NFTs to fund public goods, I think is a very illustrative one, because really the value of NFTs as, you know, collectibles or art, etc., the value of them comes from all of us. Like, the artist makes some beautiful art, but like the typically what you're buying when you buy an NFT is like bragging rights, more or less. Like, I'm the guy who owns this beautiful art, because everyone can see it the same way. Anyone can download the JPEG, but what you're buying is basically the bragging rights, and the value of the bragging rights comes from all of us. So just literally just choosing to value the NFTs that have funded public goods, in our heads, giving more status to those than we give to NFTs that are just purely investment assets. Like, that literally drives more value to public goods just by what's in our hearts and in our minds. And I think that that can actually go beyond NFTs. It can go beyond new property, because there's so many things like that that already exist, so many things where the value comes from me and you and what we pay attention to, what we value. Like, again, I think the value of most online advertising comes from us. It's not because there's people working really hard and doing this great service of, providing value for businesses. They're really just selling our attention and finding better and better ways to get us to look at a thing. But the value at the end of the day comes from us, and that's something that we can control. So, like, I think like NFTs are such a useful example because everybody knows that the value came from thin air and that it's all from us. But there's so many things in our society that are that same thing. And when you think about community ownership in Web3 and in crypto in general, like that to me is what it means. Like the value of anything that comes from communities, that comes from people, is literally under our control. We are just not controlling it right now. Like all we have to do is decide that we want to control that value, and then it is ours to control.
Absolutely. Absolutely. I think one of the things I've been thinking about a lot recently is this assumption that systems are completely out of human control in digital space. And I think with Web3 recently, we've seen a shift into the realization that since all of these things are human generated and now we're starting to decentralize them, we're moving into the advent of the fact that people can't necessarily determine the direction of how it is that those the constituents of those systems are utilized. So our engagement with social media is no longer direct capital to the people who operate the media. It can be instead collective ownership, but it's also like just a lot more difficult for a single party to profit from it. So there's a recent controversy that's kind of interesting about how like ETH Denver is asking for a lot of information from people who are going to the conference in order to keep the cost of the conference down. And their justification is that they will share a lot of that information, your Twitter handle, your wallet address, all these different things with advertisers. And it's interesting, right? Because it's like it's a very transparent approach to this idea that like if you're getting something for less than if you're getting something for cheaper than you should be paying for it, you're probably paying for it in some other way. And yeah, so it's I guess I'm kind of like I'm kind of noodling here. So I'd love to hear a little bit. I see Vienna, you have you're unmuted. I'd love to see if you have something to say.
Thanks, Pan. Well, there's so much to say on that. Like I just feel like the way that we have been, in a way, capitalizing on human attention, as Niran said, like it's just, I really wish we can do better. Like what I mean by that is, this whole like advertising economy thing that's built on top of the kind of capitalist like paradigm that we have. I really wish that we talk about, okay, so now what is ours to control now? Like, might we, instead of a GDP, create something more like a GNH, like gross national happiness? Like, how might we create new asset classes that that we could, start with land value tax, and then monitor like the feedback loop between all the variable factors. Like what I mean by that is like when I think about like climate out, like I like the fact that climate like focuses on like this speculation, which is a job that our mind do pretty well. Now, like I would say also that we would be falling flat on what our potential is if we just end there and say that actually even carbon is not a good predictor of whether we're going to have civilizational collapse or not. Like so that's why I often go back to temperature. Like it's important for us to even conceive of that as almost like a barn raising project, which is that we it's the people who can self-organize ourselves to complete that feedback loop of like what is broken now, and be the almost like the last mile runner between what is broken and then like kind of put yourself out there to like heal the last mile feedback loop, so that it's like it actually goes back to a regenerative loop again, so it doesn't go to this trajectory where we're heading to hot house earth together. But to do that, we need a lot of novel asset classes, like financial instruments that we are not, or mechanism that design that we are not even thinking of yet. While we were talking, I wrote down things like, somehow we need to have more legible representation of value flow. Like, I would love to see more cooperative game theory. I would love to even create like Mind Heart Bank or something. This is just, along the course of our discussion. And, I'm trying to do my little project there that I call Project Calvin, which is, trying to bring together prediction with even impact, and allowing that to feel some kind of tokenomics that ensures like we don't head towards existential crisis, or rather we even use existential crisis as a way to kind of come back to mind heart bang. I hope that's making some sense to you. I'm talking in multiple level of abstraction here, so
Yeah, but at the same time, what you're kind of trying to needle back to, I mean to say, is this idea of the underlying asset, right? Like, what is the underlying asset? It is human connection and our relationship to the planet. So there's something I want to go back to, like Kim Stanley Robinson here a little bit more, and this idea of the half Earth that emerges within the book. It's this idea that you should have half the Earth given to the other stewards of the planet, which are everything other than humans. And I wonder if there's not some way to say, okay, this is specifically highly valuable, this planet, because it's a scarce resource. And so we must treat our use of that resource as something that has other people's other parties participating in that economy of utilization of that scarce resource, but be playing it in a way where, because this is where the reasoning always falls apart, right? It's like you want to be able to position yourself to recognize that you can have these ephemeral economies that should be hypothetically really good for the planet, but how do you incentivize people to move away from extractive mindsets? Because like, it's that's kind of like where it starts to fall apart, is like, oh, we could do half Earth, but then you have to get people to want to do half Earth and recognize that all the other animals on the planet have value.
So I would push back just a tiny bit against that. I feel like you don't have to convince anyone, you just have to give them the better alternative. I think that people, and this is a generalization, it's not going to apply to everyone, but people want to do good, and they want to, because it feels good to do good. As Alicia likes to say, public goods are good. So I think if we cultivate opportunities, easy opportunities for, like, and this comes back to what we're talking about a bit earlier, about sort of like this fundamental paradigm framework shift, where public goods are not something we have to fund, they just become like the way we do things, right? That if we just make it really easy for people to participate in this parallel alternative way of doing, I think they will. And I think we're starting to see that, like even just people buying moonshots, like people want to contribute to something that is making the world a better place, and we have like a really beautiful opportunity to do that, and obviously that's why we're all here. But I think just creating easy opportunities that are meaningful, that allow people to meaningfully participate in improving the conditions of life on this planet, we will be pleasantly surprised at how many people want to do that. And maybe this is the naive optimist in me, but
I'm totally with you there. Like, I think the biggest gap that we have right now is that in the instance of climate change, like if you want to have a low carbon supply chain in your own life, that's very difficult to do, because we just don't have the leverage to be able to make that happen, to be able to identify like literally at every step of production what's happening and what are my alternatives to be able to make a lower carbon choice. It's just very difficult to do that. And that's why I think so much of the work ahead of us is less about particular assets and more about organizing. Because if enough of us organize together and say, hey, like if I'm going to shop at this business, I need to be able to track the flow of things through the economy, then that gives us the option to be able to make a different choice. And beyond that, if part of what's flowing through this network is value that comes from us that's currently going to other people, if it's like advertising value, land value, all sorts of value, like we actually have the resources, the wealth to make slightly more expensive choices. Like the cheapest way to get energy right now, well, maybe not the cheapest way, but like burning oil is relatively cheap of a way to get energy. And if we had more resources to be able to say, okay, I'm going to like spend a little bit more of the assets that I have available to me to make a better climate choice, that's something that a lot of people would choose to do. But the prerequisites are having those resources, which a lot of people don't have, and having the leverage to be able to actually identify the value that's flowing through the economy. And that's something that we can only get by organizing human beings and showing them that they have the power to make certain demands. And if they don't have their demands met, they go shop elsewhere.
I just want to say how much I love this conversation that's happening right now. And I just want to thank you, Ron, for creating the space for us and for everybody for being part of it. Just to add one thing to the sort of the choices conversation, like there are these very real Molochs out there in the world, the oil and gas companies and others who are like hoarding resources and sort of spreading misinformation. And I love the sort of vision that we can basically just move flows and people will move. And to me, ultimately, like, the thing that gives, people power is like numbers of people. We've said for years that like, we may never have as much money as the big oil and gas companies, but, we might have more people. And I think that really is the fundamental thing. And like looking at where the value is coming from is essential. There is like a lot of momentum in the status quo, and like especially when it comes to things like infrastructure, like moving infrastructure funding, like there are these sort of moments where it's possible to make change, and then there's moments where it's much more difficult, like these kind of inflection points, and taking advantage of those inflection points and sort of being prepared for them seems really critical to me, at least in the climate conversation. I'm not sure what the solution is there, other than coordination is absolutely critical, like sort of being aware of what's going on and make sure information is flowing accurately to people so that they understand the options that are available, that people are prepared to put alternatives in place when necessary. Like that seems absolutely critical to me. So like in a sense, I think like a lot of what needs to be done is around sort of timing and execution. So coordination is absolutely vital, and I see the role of DAOs as being super important to this conversation in that sense.
Yeah. Something that I have been using as a vehicle to talk about the Web3 space a lot is that, like, I mean, I shared the tweet in the weekly thread for today, which is like the difference between Web 2 and Web 3, and really the big paradigmatic event of Web 3 is that we can create economies around just about anything. That's like the big fundamental thesis, right? Like you say, oh, this thing is valuable. Okay, cool. Create an economy around it, and that's what we do. And so it's it's interesting to think that we can move flows by recognizing that because we're in control of the economies. This is the other question, right? Is like I think people look at the internet as if it's this like it's its own entity and we are under its control, but the reality is we are in control of how we engage with the internet. It is an extension of individual nervous systems, not an extension of some giant cultural object that is in control of us. It meshes very well with the idea that like community is something that is worked on collectively by people being intentionally engaged in it. And as a result, if we intentionally create economies around what we find to be important, then we can push toward recognizing these important milestones, like what you're talking about, Ben, and saying, okay, well, we have decided that collectively our community is strong enough to pursue this particular goal. And because you build community around it, you build cultural objects around it. when you build cultural objects around it, it allows you to do things like make memes, and those memes become ways to translate the importance of that particular pursuit. And so maybe circling back to the beginning of this conversation and asking ourselves, how do we fund public goods? Maybe the biggest question there is, how do you create a culture of public goods?
Yeah, the
I really
culture
like
and
that
the
last
mission.
sentence that you mentioned. I think public goods should be a mission that almost every project is working on. More like an embedded, inherent thing rather than really to figure out what is it.
Yeah. Lupin, what were you going to say? Lupin Watson?
Oh, basically, I just like to the mission is clearly important too, like how it's like the vibe, like it's like um Gitcoin lifestyle. It's I think it's a day-to-day lifestyle to think about founding digital public good and the mission around Gitcoin DAO, which is really important. It is really hard to like really think about like how can we program these digital public good, but there's always like many idea, like maybe what I was speaking earlier about fractionalizing like an NFTs with the people, basically like a sort of people that are already like a great contributor around Gitcoin who can basically can afford it. And again, when some people are joining around Gitcoin and they want to apply for grants, for example, they can they could have the maybe the opportunity to like have this kind of option which is to let's say right, if your grant is successful or you receive enough of funding, maybe you can think of instead of having to pay a fees to get into like the project, like you guys were discussing before, maybe it might be great to have this option, which is to you personally have the option to decide if you want to ready like part of your fund towards like the digital public goods or library, or to the scholar, like to help basically the people to grow around Gitcoin. Like the mission is to help also to together to grow together and to basically to empower the whole Gitcoin ecosystem and the lifestyle. So around the mission. So basically, it's just to support what Kali was saying. Is the same thing around the mission.
Yeah, I think something kind of funny here is like you almost kind of want to say that like if you're a part of a community, you could build a tax system that is like, oh, if you're a part of a DAO, right? Like, yeah, you'll get paid for the work you're doing, but also we're going to and this is just like an idea, right? Like if you're part of a DAO, you get paid by the DAO for the work you do, but then you get taxed a certain amount that goes towards funding for XYZ thing. And I'm not talking specifically about Gitcoin, but maybe any DAO, right? But then you get to decide where that funding goes, which is something that's missing from the current like tax system when it comes to being a part of like, like instant like a country-based tax system. And so it's like
Yeah, that's that's great. Yeah, maybe the word tax is it's maybe maybe we can use another word or create a new one. But it's a great idea. Yeah, I personally I'm
Yeah, the protocol fee.
yeah.
Sounds good.
So Niran, what is your sort of like high level overview of how it is we've answered this question of funding public goods?
Yeah, I think the main conclusion here is that like we're still in very early days and there's lots of potential ideas out there and we need to try a whole bunch of them. Like I think the idea you just proposed of like having kind of a voluntary, for lack of a better term, tax that people are paying from their income is a good thing to try out. Because I think at the end of the day, like the vision of being able to take value and like you basically control the funding of public goods yourself rather than having to outsource it to a government that's deciding for you. Like I think that's really where we want to be. And the most important ways to get there are to find ways to like put our hooks into different parts of the economy, whether it's the new digital economies, new kinds of NFTs, finding ways to have value there flow to public goods, whether it's value from people's income flowing to public goods, value from protocol fees flowing to public goods, literally trying all of them. Because I think at the end of the day, we're going to find so many places where we can capture value that we haven't today, mainly because of the entire Web3 ethos that recognizes that value at the end of the day is coming from communities in many circumstances. There's value that we can control that isn't necessarily about paying from our income, that we should try that. Like, I think we're going to find ways to control a lot more value than people currently think is possible and direct it to public goods.
Amazing.
Right, and I just wanted to drop a seed of thought out there, which is there's something around household unions that we could, using smart contracts, start unionizing even our ability to pay debts, our bills as household together. Because I do feel like a lot of the risk in the current economy has been pushed down to the household level, and then in a way, we can actually collectivize our like how we support the current economy together. And then, think about indexes that can curate things like how might 7.9 billion of us coordinate with one another so that instead of every hour, we are generating 7.9 billion hours that's heating up the planet. Like maybe coordinate towards 1 hour, like that it's cooling the planet. So, yeah. Thank you so much, Niran.
Yeah, thank you, Niran, for running the discussion. I would welcome everyone continuing to speak. I have to go, but
Yeah.
I just wanted to thank you and maybe on behalf of many here for making your time available to us, as well as everyone else who contributed to the discussion today.
Thanks for having me, and thanks for being awesome. Like, there's not that many people that are having these kinds of discussions today, and I think this corner of the crypto ecosystem, this corner of the Web3 ecosystem, is really the most important thing happening right now, maybe on Earth. So, thanks for being here, and looking forward to seeing what we're going to do together.
Thanks, Niran. You're the best.
Thank you, Niran.
Bye. See y'all next time.
See you.
Thanks, everyone. See you.
Bye all. Thank you.
Hey Ben, are you still here?